Hello, everybody. How are you guys doing? Can you guys confirm that you guys can hear me? Let me know in the chat if everything is clear. Should be good to go. Let me know, guys, if you can hear me. No. Uh, Kind of weird. You guys should be hearing me now. Do you guys hear me now? Still don't hear me? That's extremely weird. How about now? How about now? Can you guys hear me? Yo, what's up, With? How are you doing? Welcome, AK Trading. I don't know why you guys weren't able to hear me. That's very weird. Awesome. So I kind of wanted to wait a little bit before, just so some more people could join us before starting. Uh, but I'm not gonna make you guys wait. You guys joined first, so we're gonna get started right now. So welcome. Welcome to the first live stream that I'm gonna be hosting in the info Discord. There will be many more to come. I'm still figuring out how to make it work with my schedule. We may even, I'm considering maybe even perhaps doing daily live streams. Maybe once a day, just to give you guys what I'm looking for the day. Maybe watch out for some news. You know, today we got FMC minutes. That is in 53 minutes time, so we are definitely going to be talking about that. Um, but yeah, there's so many things that I want to go through with you guys today that honestly, I'm gonna make you guys choose the topic that you guys want me to cover, because I was very much undecided, to be completely honest, about what I should bring to you guys today. I was initially considering perhaps starting with a Q&A until FMC minutes. What do you guys think about that? Or otherwise, we could speak about psychology, maybe trading techniques. Let me know what you guys want, okay? So I can start to understand what you guys care more about at this moment in time. Do you guys all trade? Do you guys hold? Or do you guys do both? Let me understand what I'm dealing with here so I can tailor to your needs, okay? So waiting for your responses. Let me know what you guys uh, want, and then we can take it from there. Trading techniques, right? Before I talk about trading techniques, AK trading, since you asked that, how long have you been trading? 2 years. Okay. Have you reached profitability or not? Okay, you are in the break-even stage. I assume that before reaching the break-even stage, you may have incurred significant losses, right? At the beginning. Can you confirm that? Or are you one of the 0.05% that perhaps just didn't get to that stage? Okay, you face some losses. Right. And the reason why, by the way, welcome to everybody that is currently joining us. I see Adziz, I see Cryptonomy. Welcome, guys. We're just getting started. Okay, we're going to be starting with a little bit of a Q&A. Okay. Happy to hear your questions as well. Okay, but we're going to be answering AK Trading right now. So, it's funny that, we are talking about this right now because it's actually one of the things that I wanted to cover in this live first and foremost, because the truth about trading is that it truly doesn't matter the strategy that you are applying. Okay, it really doesn't matter. What matters is your psychology and which stage it's at. Have you ever asked yourself why we can all look at the same exact chart and we can draw different conclusions? Why is that? Well, that is because our minds project different ideas, right? It's like when, for example, you've had a bad day, perhaps. Yes, we are taught differently. Sure, there is some truth to that, but it's not all. Because let me show you this example, okay? So let's say that you have had an argument with your wife or your girlfriend, right? Maybe there was a situation in your family. Perhaps somebody made you mad. Anything that perhaps took you from that calm state of mind to a more agitated, a more angry state of mind, right? And then you start trading. Chances are that during that trading session, you're not going to be performing as well, right? Then take another day where perhaps you are relaxed, perhaps you're following a diet, perhaps you went to the gym, you are sticking to your routine, your checklist, and you feel good. Can we agree, right, that there is some difference between how your performance will be on these two different occasions, right? And you're going to be trading the same exact strategy, right? Mindset matters, guys. I completely changed my game when I realized that the strategy, perhaps, yes, there is, like, for example, let's say that you get into the advanced stages of trading, right? And you understand order flow, or perhaps you're teaching yourself order flow, you're following a course, whatever, right? Then there is a little bit of a difference there because there is data in front of you that you can actually analyze. But even there, right, psychology still matters, okay? So why am I going this far with giving you an answer, AK Trading? To make you realize, right, that the charts and the way that we trade is merely a reflection of ourselves. If I up into a trading session, right, where my mindset is not there to concentrate, to take things the way that I was meant to take them, right, I'm gonna be saying this chart is too messy. I'm gonna be saying that the market is taking me out. I don't know what the hell is happening. There's something wrong. Fuck the market. Whatever, right? I'm gonna be blaming everything else but me. Instead, once we realize, right, that our trading performance is merely measured on our psychology, when we are taking a trade, everything changes. And from there, you also apply another concept, which is that every loss is not just a simple loss, which I'm gonna say one more thing to make this answer as complete as possible. What people will tell you, good traders will tell you, is that, you know, taking losses is part of the game, which is true. Every system will incur losses. Every system will have recurring losses, multiple losses in a row. Okay? There is absolutely that part which is true. But what is also true is that when you're taking a loss, the way that you should be taking it is asking yourself, what is the trade trying to teach me about myself? Did I do something wrong? Or is it merely the game of probabilities that is currently taking the other direction? Because that's where you actually become a trader rather than a hidden gambler, so to speak. So, AK, hopefully I answered your question. Instead of trying, and I'm gonna show you guys strategies, okay? The way that I want to take this live stream stuff on Involio is I want to take it as a mentorship type of thing. That's why initially at the beginning of this live stream I said that I'm interested in doing daily live stream at some point. Okay, if you guys like that idea. Don't focus on strategy upping. Focus on the one strategy, but understand that it's mostly your psychology. Okay, and I'm gonna get a lot deeper into that argument because it's very, very like I literally have a trading Bible that I created myself. Okay, it's a big ass document on Word which I've printed, and I can tell you the majority of the section of this trading Bible that I created is about psychology. Okay, there's a lot to know about that. Bro, announce you're live on Involio, get more people in here. That is a very good idea. Thank you, Cryptonomy. I'm actually gonna do that right now. You can tell that I haven't live streamed in here before, so give me a second, guys. That is a very good thing to do. Any questions, guys? In the meantime, I'm answering questions until we get FOMC minutes. Then I'm gonna give you guys my breakdown of the market, what I'm expecting for 2025, why I'm expecting that. We can do whatever, honestly. There is so much that I want to cover today that I may not even be able to cover everything. We're gonna be doing many more lives, okay? So there's a lot to talk about. We are live. All right, cool. Thoughts on breakout prop and prop firms in general. So the way that I see prop firms is pretty much like a gold rush. Okay, I'm notice that I didn't say gold mine. I said gold rush because I think that they are today and gone tomorrow. Okay, because inevitably what you need to understand is that, in my opinion, the markets and the way they have been rallying for the past few years does mimic quite a lot the Roaring 20s. To be completely honest, where, you know, it gets the attention of a lot of people, but then once inevitably I think that a major reset occurs, I think that that's where a lot of market participants will pretty much leave the space. And I think that because the prop firm game, while yes, perhaps some do you know, they do copy their profitable traders, I think that most prop firms just simply rely on the fact that most people tend to not pass their challenges. Okay, that doesn't mean that you cannot make money of them. I think that Breakout Prop is a good prop firm. I like Breakout. But you gotta be very, very careful with these prop firms, man. I'm telling you, I'm gonna bring you guys some prop firm content eventually. I personally still consider myself a person that likes to trade in its own space rather than live streaming it. Because I feel the fact that I need to perform in front of people. Okay, I do feel that, and it's a pressure that personally I do not want to. I don't want to have it when I'm trading. Okay, hopefully, so hopefully, you guys respect that. Like, I could potentially even record it, but I don't know. I'll see. But yeah, good prop from Breakout. Okay. Uh, Ryan shared my post. Shout out to Ryan. Great guy. Great guy. Any more questions, guys? Any more questions? And also, Aziz, before you up on Breakout or any of these prop firms, are you profitable? Don't get blinded by the chance of potentially trading one of these accounts. Okay, you gotta understand that it's a game where most people simply lose. Okay, and it's because people get blinded by those account sizes, which it's all BS. If you guys want, I've actually put it in an extremely easy way, the prop firm game. I literally gave you guys some secrets, the best risk system. This is stuff that I came up with 2 years ago. Okay, I've been doing the prop firm game for quite some time now. It's nothing new. But yeah, there is plenty of guides on the Profit Madness YouTube channel. So definitely watch that. It's short videos. I'm sure that you guys will enjoy it. Sufmo, did I say your name correctly? Let me in. I want to tell you something. What do you want to tell me? Yeah, 10 to 20% a month usually, but I have a small account. But that is great returns. Like, look, it doesn't matter. Sufmo, I will let you speak in a second. Let me answer this question first. Look, 20% is great percentages. Like, the way that you should be looking when it comes to trading is remove completely the idea of money. Okay, as traders, and going back to the first question that I asked by AK Trading, right? As traders, we are not like at the beginning stage, right? And this is why there's levels to this game. At the beginning stage, you think that you're here for the money, for the freedom, and all that. As a seasoned trader, or a seasoned upcoming trader, or I should say, you start to realize that you're not here for the money. You're here to understand yourself. And that is big. And your understanding of what I just said merely depends on your current level in this game. Okay? So now let me allow Sufmo to speak. Are you in the... Yo,
Hey,
yo, what's up?
how's
What's
it
up?
going, Alex? I just wanted to say you're the first person to get that correctly the first time. I'm so impressed.
What? Oh, okay,
Yeah,
okay, thank you.
you told me Tufmo. Yes, that's my name. First of all, a big fan from like when I discovered you first on Involio, there was this live with Miss Messi and like I don't know if you remember
Yeah,
that,
yeah,
but
yeah.
like
Remember.
I'm pretty sure just because of that live, I started becoming like Involio's streamer, kinda. So I have my own kind of kingdom here. I just wanted to say, first of all, welcome back to like the family because you were inactive for a while, right?
Yeah, yeah. I had to take some time to simply
Yeah, it's all good.
recalibrate. Yeah.
Just welcome back, and I wanted to like you're more than welcome to join. Like my lives kind of average usually 30 40 viewers. You're more than welcome to join whenever. Like I'll let you in. We could speak with each other. We could talk. Like I just think you're one of the best traders in this app. So it would be a shame not to like show everyone this. I just see 8 people in the audience now, and it's kind of like I feel like everybody's missing out on such quality content. So like I just wanted to say, you're more than welcome to join the live main stages anytime, really. And I just wanted to welcome you in. And also about what you said about the like breakout. Yes, exactly. I failed, I think, something like 4 different prop firms before getting my last one successfully, the one that I'm trading with right now. And what changed between the four and this one is I took a break and learned to be profitable.
Yeah.
So yeah, so it's not a game to do if you don't have a strategy, have something that you can trust on.
Absolutely.
Yeah.
Thank you so much for all the compliments, and I will make sure to live stream with you. I'm here to stay. Like I said, I had to take some time off, honestly. I like my personal space, to be completely honest, but I also understand that as I believe that things will eventually come to an end, or at least that there will be some sort of a reset that helping people out will not only give me more karma points, I guess, but also, help someone out and make sure that we all thrive in what, in my opinion, is going to be a very different world in 10 years' time. Okay? So,
Yeah, wow. Yeah, I, also, oh, sorry. Also, I just wanted to ask you because I know your controversial opinions on like market, and you were right many times about them, by the way. Are you as bullish like short term as I am, or are you looking like, are you just thinking like, the maximum we're gonna get is 114, or what's your current opinion on Bitcoin? I'm just curious.
okay, good question, because this is something that I wanted to cover in the live stream, regardless. But okay, the way that I will look at this is that we are now in a situation where, when did the cycle truly start, right? And whenever I say this, we kind of gotta. Let me actually open up the chart for it properly. When we talk about when did the cycle begin, most people will say, at least at the beginning, okay, I'm not speaking about seasoned traders, because seasoned traders, well, we have been through it all, right? And we know when cycle starts, and truly the cycle starts once the bottom has been formed. Okay, so in my opinion and in my eyes, right, the cycle started at 15.4k, right? And you gotta realize that this is something that we have been in, right, for almost 3 years, truthfully. Okay, so we have been up on Bitcoin specifically. We went up 623%, right? When did most people join? I think that the smarter retail probably started joining Bitcoin as the ETFs were announced, right? So we could say around 48k. And these people will be up 131% on Bitcoin. Now, what about the majority? Well, majority of people did not buy Bitcoin. Simple as, right? Me included. I was there. I could have bought it. I remember calling, and look, I have thousands, thousands of updates that I've been sharing in my, I don't want to say a VIP because I don't want to shill it in the live, but it's where I posted it. Okay. I remember that day where I said I think that the Bitcoin bottom is in, and it was. Okay. But why am I saying that? Because most people, like I said, did not buy Bitcoin. So the people that have bought Bitcoin and are a part of retail, I truthfully believe that the majority started buying up in year, as 100k was broken, or has been broken, or was broken. Somewhere around this range, which is the reason why we are seeing what, in my opinion, is not only a range, but a distribution range that could potentially, like I've explained in my recent YouTube videos, could potentially have a push to the upside. So to answer Sufmo's question, I think that yes, there could be a scenario where we get some sort of a pivot high up in these regions, up in the 113 to potentially 137. It's kind of hard because you're dealing with new all-time highs. And truthfully, we should not be caring too much about Bitcoin. Unless you have been buying Bitcoin and I showed you guys your percentage, you shouldn't really worry about Bitcoin because, like every single other previous cycle, towards the end is where you get your old season. Okay, so regarding Bitcoin specifically, I think that there is a possibility of a bull trap somewhere around this region. It doesn't have to be that much. The thing that people will start to mess up is that if it doesn't stop at 114, like I personally think it will, or 114 or 115, for example, and it goes a little bit higher, as long as we are in this zone and we don't flip it as a support before continuing higher, I will still be calling for a push to the downside regardless. Okay, why is that? Because there wasn't enough fuel during this move to the downside to sustain a prolonged push to the upside, like a lot of people on Next are proposing. We had what is that? I think it was like a 30% correction. Yeah, 31% correction from the previous all-time high. Do you think that a minus 31%, knowing Bitcoin's volatility and the requirement for liquidity to push to the further to the upside, do you think that is enough to go to any of these crazy targets that people mention on social media? Like I've seen people normalize the idea of a 160k Bitcoin or the idea of a 300k Bitcoin. And I'm sure that you guys have seen those at some point. But do you really believe that a 30% correction to the downside, and let me actually simplify it for you guys by removing all of these percentages, do you really believe that a minus 30% is able to give you a 300% when in the previous cycle, right, from the previous all-time high, we corrected 77% to give us a 660% gain up until now? In my opinion, no. I don't think that is enough. I think that we need more of a correction if, and only if, Bitcoin has much more upside to go. Okay, so why did I also say that in my opinion we shouldn't care too much about Bitcoin? Altcoins, okay? What you want to do is look for altcoins and look for critical levels. I'm not telling you to FOMO because I've shared setups, right? In the VIP, which you guys can see. I've shared a bunch of setups, and those setups were shared on the 2nd of July, right? So we're talking about 7 days ago. Where is it? Yeah, for example, let's go to send, okay? Let's go to send, just to show you where I was bullish. Cool. Let's go on the 4-hour. So this was the trade, right? Which you guys can clearly see. I shared here. Okay, we had to hit this entry. I was looking for upside, and we got exactly that. We spent a little bit of time on my entry. Today we started to spike up. Okay, those green highlighted prices is pretty much TP levels, and yes, this is potential the final TP. But the way that I'm doing this this moment in time, and the way that I will be managing these trades, especially if you're sitting in longs now, is that any take profit level should be treated as a way for you to start moving your stop loss at least to break even. Because like I said, Bitcoin is proposing a very dangerous move where I truthfully believe that we are seeing a bull trap where, of course, because it's going to be marking a new all-time high and it's moving to the upside, the rest of the market will follow. And like I showed you guys on Send, for example, it's not just Send. Like there's a bunch of more trades that I could show you. FTT, for example. Let's go on FTT. What is it? currently at a profit. Didn't really blow up just yet. It's at a profit. AXS, another trade, currently at a profit. I don't remember where I took other setups. Anyway, I think that you guys get the point. I'm overall short-term bullish, okay? But you gotta be careful because you should be taking profits at every take profit that you have set, because we don't necessarily know exactly where Bitcoin is going to stop. Could stop over here, could stop over here. You should not treat this as an old season, guys. Old season will only be confirmed as Bitcoin if Bitcoin is going to lead, because it's not a requirement upon a retest of support. Continuation higher. This is your start of an old season. Otherwise, what I personally think that is going to happen is this, where we get the bull trap, all coins move up, retail FOMOs, okay? Retail will start to say, oh, look at that, this coin is up 60% over 2 weeks or a 1 week time frame. Bullish, 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 buy, 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 buy. Okay. What then happens is because we have unfulfilled liquidity targets to the downside and interesting levels such as this breaker over here, which hasn't been retested, I think that this will get retested, and there two things can potentially happen. Altcoins will get demolished, and the reason why I'm saying that is because of the Bitcoin dominance. The Bitcoin dominance is still quite high, so while the percentages on these altcoins look juicy today, for example, I've seen XLM up like 11%. Truthfully, look at where the dominance is at, right? From a peak of 63.03, we are now 64.82. And this is a retest of previous resistance now potentially turning to support. I think that there is a potential of another push to the downside, yes. But look at all of my projections. They're still leading to more upside. So, yeah, I think that short term we will get some sort of a bull trap. I think that then what happens is that altcoins will see a carnage, which in my opinion screams opportunity. I still have cash on the sidelines. I have some new positions that I've opened. Shared some of them on Involio. For one of them, for example, is this one over here, which I'm going to show you guys right now. It's actually the Algorand position on spot, which at this moment I think it's up like 20%. Let me show you guys right now. Just to show you guys when I started buying once again, okay, on certain positions. Look, Algorand is one of the last buys that I've made. I also bought FTX. I DCA'd on this twice. These are some smaller positions. You can see it by the entry size. It actually reflects my portfolio, so 0.2, it doesn't really matter. I was looking for some exposure on those higher risk low caps back here, but this is where some of actual money is actually sitting in for me. I have lower positions on Algorand, which I wasn't able to share on Involio because they were made in the bear market, but that doesn't matter because this is where I started buying during the last retraces. Okay, I think, and the best scenario honestly will be for a total altcoin carnage, because you gotta look at things like a trampoline. The more liquidity that you seek to the downside, the bigger the expansion that you're going to witness. I mean, isn't that what the bear market teaches you, guys? Look at it. Every single time we had a significant retrace to the downside, it was in preparation of a bigger move to the upside. So, you know, if I'm sharing to you guys bearish ideas, isn't that technically bullish? Until you see me start to say, okay, I am completely getting out of the market or getting out at least 80% of my capital, I am still a bullish person, okay? But I want to see my retraces, okay? That's where the money lies. I look for the best possible entries because to me, and it should be to you as well, in this cycle more than ever, you should be looking at the ROI, right? The return on investment is your most important metric as an investor. You don't buy a node just for the sake of buying whatever you think that it's good and you just sold. No, you gotta measure the ROI, the percentages. Why am I saying that? How many of you guys are in the US right now? Can you guys let me know in the chat? Is there anyone from the US in the live stream? Is there anyone from the US? Jay is from the US. Okay. Anyone else? Just Jay? Okay. So Jay, um, one thing that we all know, and I'm showing you guys the chat right now. One thing that we all know is that the DXY has been crushed, right? It's currently trading at like what? Now it did get some sort of a recovery. Like, let me actually show you guys the DXY. Right? It's currently at 97. Cool. Happy days. It was trading at 96 just a little bit ago. Okay. What does that technically show us? It shows us that the US dollar is weaker against other currencies, or it's weaker in general. What does that also imply? That the buying power is lower with the US dollar. So you are now getting, even though the Bitcoin price is higher, you're now getting less Bitcoin. You're getting less of your money worth than you would have gotten, for example, 3 years ago, right? 3 years ago. Let me actually find a good example of that. Perhaps in May. Okay, I think that May should be pretty good, but I think that, well, obviously the price of Bitcoin was lower in 2023, so not really a good point that I would like to touch upon. This correlation actually shows a little bit better when you compare it to other currencies. For example, if you guys watch the Bitcoin versus Euro chart, things look quite different. For example, here on the Bitcoin versus Euro, we are not at a new all-time high. Wow, isn't that interesting? Well, obviously that is because the euro, and I'm European as well, is a stronger currency at this moment in time compared to the dollar. So while, how can I say it? People in crypto that are unaware of this dynamic, right, of this point of view, are rejoicing of Bitcoin making a new all-time high, right? Or perhaps it makes a new all-time high over the next few days or weeks, right? What if it's just another lower high on the euro pair? Why is that important, Alex? Well, because you are, in my opinion, in a situation where with the US dollar, you're potentially getting trapped if you don't know what you're doing in this game. You are getting less and less money worth of whatever you're buying. Doesn't have to be just crypto. And ROI is more important than ever, because even when you make the ROI, if the US dollar keeps on pushing to the downside or remains at these levels, you're not making the money that you will have made over the last 3 years, for example, right? So why am I saying all of this stuff? Entries, guys. Super important that you try to go for the best possible entries and the lowest prices as possible. You are being handicapped by much bigger players before a potential reset, to get you into a situation where if you don't actually make a plan to make real money in this cycle, by the time the bear market hits, not only will you have lost your money, but perhaps your buying power is completely gone. Especially if we enter a recession. You know, they say that a recession is the best time to accumulate for wealth. Well, isn't that potentially what they're planning on doing? To erase your buying power so that when opportunity actually strikes the door, you don't have money to throw at the market? Have you ever thought about that? What are your guys' thoughts? So let me know your thoughts right now. Are you guys following along? Do you guys have any questions? Let me know, because we are about to cook. There is so much I want to cover. Can you talk about when to move your bags when bull season ends? I'm actually planning. I'm sorry, guys, because I keep on repeating the VIP word, the word that a lot of people don't want me to say. But I was actually planning on having a real life meetup towards the end or at the end of the bull run with members to talk about exactly that, how to diversify your profits so that you can actually thrive in a recession and have actual capital and build real wealth going forward. So it's in my plans. It's something huge that I want to do. I know what I'm looking at. I think that I've discovered the next crypto, and I'm not talking about cryptocurrencies. I'm talking about a whole new asset class, because crypto is getting saturated, and that's the truth of it. I think that the volatility will remain. I think that there is great money to be made in crypto, but we shouldn't be blinded by crypto, because the same way that you didn't consider crypto in 2013, it's the same way that perhaps people are not considering these brand new industries and investments that you can be making in the future. What is it? Guys, don't worry. I'm here to make a dent, hopefully a positive one, for all of you guys. When I say that there's so much to cover, like, look, I've been the first time that I opened a trade, guys, was in 2017. I've paid my fair share in the market, and I spend a lot of time studying. I still study a lot. I still consider myself a student. I consider myself ignorant to many, many things. Okay? But I think that something is clicking or has clicked. Okay? That's the best way for me to say it. So how can you know when bear market will hit? Do you look at any currency, other currency? Yes, I look at obviously the euro. I look at the Japanese yen. I look at a bunch of stuff. So yes, how can you when bear market will hit? Well, you don't have to know when the bear market will hit. You gotta know when you're planning on exiting. See the problem here is that, and I'm sure that if you guys have been in the previous cycle as well, the problem in the last cycle was not being able to make a profit. I'm sure that if you guys have been in the previous cycle, you were at a profit, right? Perhaps your portfolio grew exponentially. The problem that you had was not knowing when to take profit. And that problem, unless you have resolved it, and unless you have a plan for this cycle, will keep on repeating itself. So it's not about knowing when things will happen or not. It's about having a plan, understanding that you're not here to sell the top. You're here to make money. You're here to make returns. Okay? Returns. It doesn't matter if I sell 50% away from the actual high. Who cares? That's why you can take partials, right? And hopefully you guys don't mind my tone. I'm a real rational person. Like I'm one that will tell you if you're bullshitting. I'm one that will tell you things the way that I think. Okay. Hopefully you guys don't take them the wrong way. But I'm really somebody that will try to, live. How can I say it? A good explanation so that it actually remains in red. Okay. When will VIP come out? VIP is already available, actually. I just don't know if I'm able to promote it or anything. But if you go on the Profit Manus channel, you go under any of these videos, you will find the link. I'm also working on, having integrations with Involio or stuff. Like I had a VIP on Involio. I just had to remove it because there is this shift that is ongoing that you guys are aware about. Any other questions, guys? We have 12 minutes, I think, until FOMC minutes. Any more questions? What do you guys want to know? I'm taking anything. Questions, questions, questions. Yes. Taking profit. The strategy is explained in VIP. You will then know what I'm buying, the percentages I have for each coin in my portfolio, where I'm selling. More updates. There's honestly a lot of stuff. A lot of stuff. Okay. Um, what can I give you? Okay, okay. I will do this. Problem is that let's do something, okay? I want to wait for the FOMC meeting, okay? Afterwards, for the people that will stick around, I'll give you guys a simple trading system that if you apply it correctly, and obviously this is not financial advice because I'm not a financial advisor, sir. I cannot guarantee any sort of profit. But as long as you have the understanding of where price is going, this strategy, which is very, very simple, will put you at a profit more times than not. And if you take profit at the first, at least at the very first take profit level, and you move your stop loss to break even, you will most likely be very, very profitable. How about that? Do you guys like the idea? I'll give you this strategy today. I've been using it myself. A lot of people are making money off of it. A lot of people are. Okay, I'll show you guys some stuff. This is up 15%. It was said here, where is it? Yeah, 15% on Trump. FTT 100%, 40x. I showed you guys that trade. Send 83%. My trading account is up 213% in 23 days. I'm not here to brag. I'm literally just showing you guys a strategy that I'm about to teach you. It's literally just that, okay? I don't want to be eaten alive by a bunch of people. They say, all you do is share VIP. You share VIP. Oh my god. So, let me ask you a question. I see Aziz typing, keep on typing. I want to ask you guys a question. What do you guys think about the rate cuts? Okay? What do you deem rate cuts to be? I want to see all of you guys answering this. Do you think that rate cuts are bullish, bearish? Why? What are rate cuts? Yeah, I was about to ask about moving stop loss to break even. What are your thoughts? Because SL is supposed to be for validation or to secure profit. Right. Okay. But okay, so let me put it this way. Because what you said is correct. But I would also say that most people will also do not spend enough time trading a simulated environment. And I'm referring to demo trading. Technically, after discovering your strategy, you should be spending at least 6 months to 1 year in demo. If I ask around, most people did not spend that time in demo. They straight up started with real money, right? And I'm sure that perhaps you did too, unless you started right away with demo. I didn't. I started with real money. I lost anywhere between 30 to 40,000 euros trying to learn, right? So why am I saying to move your stop loss to break even after your first take profit? Well, not only does your stress decrease a lot, but you also are then able to understand your strategy better, because you then have no skin in the game. Well, you do have money running, but you no longer care about the outcome, because if it goes down, you will be happy that you have taken some partial off. If it goes higher, good, your trade was valid, right? And while yes, stop loss is supposed to be for invalidation only, and you shouldn't be stopping, you shouldn't be moving it, whatever. I also just told you to move it back to break even. And if I'm telling you to put it to break even, there has had to be a reason why you will have entered that price. That's why most of my trades tend to be limit orders, because I'm entering very precise areas. Let me show you guys an example. My AXS trade, right? Look at where I entered. Actually, let me open up the chart for you. And let me actually go back in time. Cool. So my entry was right here. This little wick is what fulfilled my entry and everyone else's entry in the group. We could say that was a precise entry. Okay. It then went to the first TP, right? So the reason why I'm showing you guys this is because I knew exactly where I want to enter and why. I had a breaker in here, which, if you guys don't know, breaker theory is pretty much the easiest way for me to say. It's pretty much a level that was either a consolidation or a level of support or resistance, which, depending on the nature of the breaker, gives you a level of a retest and then a continuation to the intended direction. Okay. In this case, we have a bullish breaker, which is actually highlighted by this part over here. Okay. So this is your actual breaker. Okay. Make this a little bit thicker. This is the breaker pattern, where you basically get a low. This is a bullish one, by the way. It's vice versa for the bearish setup. You basically get a higher high that takes out the previous highs. Okay. Then you get a lower low that takes out the previous lows, and then you get a higher high. And then what you're looking for is essentially a retest of the previous consolidation, which, if I were to deploy an hypothetical equilibrium point, you will also see that in this representation, it will be where you will have entered, and then you will have profit from it. Simple as. It's literally what I've used to make that trade, which netted me over 233%, I think, on that trade. Okay. It's vice versa for the bearish setups. Which is, in this case, low, high, low, retest, continuation, lower. Okay, you're looking for the wipe of the high, wipe of the low, breaks the structure. Imagine that this is a war area of resistance. You're getting a retest on around the equilibrium point. If you guys trade fair value gaps, this is where you tend to see fair value gaps. This is your breaker. This is where I have fair value gaps. You tend to see this confluence. Ideally, if you see this confluence, you get a better high probability trade, and then you're looking for the correction to the downside. Okay, just to make it very, very quickly. Now, I showed you that because, like I said, if I'm telling you to move the stop loss to break even, there has to be a reason why you're entering in that region in the first place, right? Many times, if a setup is to be validated, or at least the best setups, okay, let's say the best setups only. The best setups rarely, maybe twice at most, rarely come back to your entry. You want to put yourself in a situation at the beginning, if you're going to skip all of the demo stuff, right, to be in a position to not lose money. Okay. And because we have seen price coming back to my entry, not only twice, but 3 times and 4 times, and we could even say a few more. Well, yes, technically now I will still be at a profit. I actually closed most of my position over here. I was able to close my position entirely as this level of take profit flipped as a resistance support, a retest, and then I knew that a correction lower was coming, and I ended up closing my position because I was anticipating something like that. Okay. So to answer the question about stop loss placement, if you're gonna put it break even, you gotta know why you entered there in the first place. That means that most market entries are gonna be wrong with this system. Okay, or at least not as perfect as they should be. It also puts you in a situation, like I said before, to only stay in the super high probability trades that just simply go to your final TP, or at least high enough to not even care about reaching the full TP. Because if you have multiple take profits, let's say that year you take 30%, year maybe 20%, you're already 50%. You're already left with just 50%. Here, perhaps you take 30%. By the time you know it, that you have reached TP3, you have already taken 80%. So who cares about 20%, right? You don't marry a trade, okay? And that would be my advice, okay? So yes, there is some truth to that, but depending on which stage you're at, I will play a little bit different, okay? I would much rather, instead of being so, I don't know, so traditional, right? About I'm not gonna be moving my stop loss because it's for validation only. Look, I'm here to make money. I don't give a fuck about what most people think or do, right? If this is working for me, I'm gonna keep on doing it. That should be your approach, honestly, guys. You know what? You know what I've realized, right? 8 years in this game is that at the beginning, right? I'm sure that most of you guys have had some sort of thing happening towards the beginning that made you think that, oh wait, this is too easy. I'm making profit right away. Did that happen to any of you guys? That you guys started to make money right away at the beginning? And I'm not talking about copy trading. I'm talking about your trading. Did that happen for any of you guys? We got one yes. Yes. This is typing something. This guy's cooking a paragraph. Maybe periods or mostly round trip. Okay, cool. So we can agree that to a lot of you guys, that stage of confidence at the beginning came. And then the inevitable came, right? Which was drawdown, perhaps liquidations, perhaps whatever. Thing is that you most likely blew your account, okay? What changed afterwards? From that moment onwards, you started to seek all sort of information. You started to change whatever strategy. You added a lot of things to the mixture. For what reason? I will answer it for you. Because of ignorance. And ignorance, guys, is not an insult. It's a stage for everybody. Because we are not born knowing this stuff. You come in this game that you have to recalibrate the way that you think. You need to recalibrate your brain. And it's very, very hard. That's why most people call it a scam and just leave the game. You need to change completely the way that you think about it. So why did I say what happened at the beginning and then you started to add all of this different stuff? Because you didn't realize that what you were missing was just a psychology part. Because you didn't know the most advanced strategy, you didn't know ICT concepts, you didn't know order flow, you didn't know any of that. You were perhaps following EMAs, it was working, you were making money. So what changed? I'll tell you what changed. You got too complacent, you got too secure of yourself, you got too confident, you got cocky. The market doesn't like that. The market doesn't like where you're scared, the market doesn't like where you're happy. You need to be normal, you need to be balanced. Balanced. Yes. Why did the risk management change, member? Why did it change? Because you got too confident. Right? You said, whoa, shit, if I'm making $10 now, I could have made 1,000 if you risk 1,000. And then you started to trade differently. You started to move your stop loss, whatever, whether to the downside or to the upside. You started to mess it up completely. Yes, you felt invincible. Guys, what did I open this live stream saying? It's a mindset game. It doesn't matter which strategy you use. I will show you guys a strategy that I swear, I honestly swear, like my chart right now looks confusing as hell. You will say, what the fuck are these lines? What is Alex doing? How can he trade in this way? Because the strategy doesn't matter. I will show you guys something that if I were to show it to most people that are studying ICT or smart money concepts, supply and demand, most people will kill me because they will say, so you're telling me that everything that I studied until now was not required? Do I think ICT is real? I studied ICT. It wasn't my first mentor, it wasn't any of that, but I did study ICT for a very long time. And what I'm going to tell you is that concepts work, but what doesn't work is the trader. Most people that study ICT end up failing. But is it because ICT doesn't work? No, it's because their psychology isn't there. Strategy doesn't matter. We can even, like, honestly, obviously it's not the most rational things of doing, but you could even come to the charts, right? Flip a coin, right? And then take the direction of the coin. Over a long period of time, most likely, you could be making a profit if you have a strategy around that. It doesn't matter. Welcome to the game of trading, guys. You're not here to make money. You're here to discover yourself. All right, guys. Let's see what we have with the FOMC. Does anyone know what they're saying? I haven't opened anything. I haven't opened anything. Hold on. I'll change the screen, guys, for a second. Give me a second. I need to go on Twitter. What I don't like about ICT is that we're supposedly liquidity. There is no actual volume. That's why I said if you are able to use order flow, if you want to be super precise with your entries, that's where you identify real liquidity versus fake liquidity. Okay, guys. By the way, guys, follow me on X if you haven't already, because I do share a lot of stuff in there as well. So FOMC minutes. Some officials believe appropriate path is no rate cuts in 2025. A couple participants say they're open to July rate cut if data allows. Several members said current rate may not be far above neutral. All members voted unanimously for no rate cut. I mean, is that really new? Did we not expect that? Did we not expect that? Okay, so we can see that the market isn't really reacting. I mean, obviously, if you go in the 1 hour time frame, you're going to be seeing a little bit of downside potential, but I don't think that much has changed. Okay. So before, I asked you guys one question, which was, what do you deem rate cuts to be? Out of sentiment, guys, I'm not asking you to be correct or wrong. Do you believe them to be bullish or bearish? Out of sentiment, let me know. Comment what you think rate cuts are. Membra says bullish. What do you guys say? Bullish. Anyone else? All right. So majority of you guys, well, obviously two of you, said that it's bullish. Look, why do rate cuts happen? That's the first thing that you got to ask yourself. Why are they not cutting, right? Powell said that they're not cutting because they don't know the impact because Trump wants. That's a good answer. But Powell said, right, that they're not cutting because they have a mandate, right, of bringing inflation down, and also because we don't know the impact of all these tariffs, okay? So he is taking, I would say, a rational approach to such an economic change, right? Because if you're cutting the rates, what happens is that money becomes more accessible and easier to borrow, cheaper to borrow, and that's why Trump wants the rate cuts to happen, because right now the interest rates are cheaper in the euro. That's why you see that the euro is trading a lot better than the dollar, right? If you go in the euro dollar, right? I mean, look at that. Look at the weekly time frame, guys. That's a substantial growth for a foreign exchange currency, right? That's a remarkable growth by the euro against the dollar. So, guys, rate cuts, in my opinion, are not bullish in this market environment. Let me explain why. You know, it's different if we got the rate cuts, right, happening at the bear market lows, of course. It's completely different. I want you guys, if you are really serious about learning, right, don't just listen to what I have to say. Go and check the data for yourself, okay? I want you to do one thing. Look at what happened at every single pivot by the Federal Reserve during a bull market. Because what then you will notice is that every single pivot marked the top and a significant correction to the downside. We are trading at all-time highs, guys. Bitcoin is trading at all-time highs. It's not trading at 20K. So while most people, right, you guys included, have shown me that you deem them as bullish, imagine a situation where, and this is my prediction, I think I shared it on Involio, but if I didn't, I'm sure that I shared it on X, and if I didn't there, I think I shared it on VIP. Honestly, I don't remember where I shared it, but I did share it somewhere, where I stated that, in my opinion, and I could be wrong about the timing, we will get a rate cut announcements on the FOMC of July 30th, which is at the end of the month, okay? I think that we will get the announcement of rate cuts, but I don't think that they will happen right away. I think that Powell will announce rate cuts coming in September or something like that, okay? What then happens is that you will see prices move a lot higher than you can imagine. That's where I think that if Bitcoin, for example, let me go back to Bitcoin for a second here. That's where I think if Bitcoin is going to do exactly what I said before, which is this, a significant correction back down, which could be down into this level or down to this level, or hell, even to this level over here. Wherever we end up bottoming, if that happens before the announcement, which implies that we may see some significant push to the downside soon, if I am correct, that's where, in my opinion, if there has to be another leg to the upside by Bitcoin, that's where it'll happen. Okay, I have 3 checkpoints: 1, 2, and 3. I don't know necessarily where it's going to bottom. There is a very good probability that we just stop over here around 87 to 81. That would be my best guess. I could even be precise and say potentially 81 to 80. Okay, in the low 80s would be my best guess, but there is a chance of potentially wick fishing a little bit lower to get all of the liquidity that we have now generated with this push to the upside, which didn't have much downside on the weekly, as you can see. All the down candles happened here. It's not that much. I think that a significant down candle down here will just recoup all the liquidity that we have left behind at this moment, okay? If that happens, and then we get the rate cut announcement, you will see Bitcoin flourish to new highs, altcoins going into a node season, and then when the rate cuts happen, that's where the top will happen, in my opinion. Because what the market will do is say, right, okay, there is a monetary policy that is about to take place. Most people are extremely bullish right now. They want to buy. So what do I do as smart money? Okay, I let them buy, but I make them buy at a higher price because I am offloading. Okay, I am offloading. Why am I offloading? I'll show you guys right now. Guys, are you enjoying this live stream or not? Let me know. Let me know in this comment section. Let me know in the chat. Have you guys learned something new today? I will check the Argentinian pesos for you. I will check it. Okay. Awesome, awesome. Look, what you have in front of you is the smart money versus dumb money confidence against the S&P 500. Okay, so what you have in red is the dumb money confidence. Therefore, retail, us included, because obviously we are. I don't think that we are institutional level traders or anything like that. I wish we were, but anyway. The one in blue is actually smart money confidence. What you will see is that towards the end of the cycle, the smart money confidence drops significantly and reaches somewhat of a bottom. That means that smart money is actually offloading while the dumb money is actually buying. Okay, we can see it over here as well. In this situation was actually quite interesting because it did increase as well. Okay, but here, for example, you can see a significant divergence where the dumb money confidence during March of 2020 was extremely low. Smart money was extremely high, and it's what actually marked the bottom of COVID. Okay. Right now we are in a situation where dumb money is getting confidence while smart money isn't. It's actually decreasing. What that tells us is that they are actually offloading rather than buying. Okay. When it comes to altcoins, since you guys are talking crypto, I also do stocks. Okay, but that's another story. When it comes to altcoins, I said you gotta buy at the lowest price possible. You also gotta know what you gotta buy, okay? Because not all coins will flourish to new highs. Most of them will not make a new all-time high. Most of them you gotta have a good position on. Because while I may be up 1,000%, you may be up just 1 or 300% on the same coin because I got positioned better. You gotta honestly be able to identify those narratives. I've spoken about it, not publicly, but I have. If you guys really want, you will find it. Okay. Then you gotta obviously position yourself at extremely low prices so that compared to where most people are buying, you don't need to hold for the moon to make a significant amount of money. Also, understand that the smart money is much more closer to a bottom than you may realize. On average, right, a bottom tends to be formed at 0.3. It's currently at 0.44. There is only a 0.14 difference. Okay? What that tells you is that this cycle is about to peak out. That's the reality of it. What season hasn't happened. Therefore, you can expect a smaller magnitude, but higher volatility. And velocity, I should say, rather than volatility. Velocity. It's going to be super quick. It's the nature of old seasons. Okay? But because it's going to be so fast, don't get married to your bags, guys. Be content. As a trader or an investor, the ones that survive this game is the ones that can be humble enough to be content and say, you know what? Thank you for what I was able to get out of this market. I'm willing to exit and not look back. I'm not buying until things settle. All right? So I'm telling you guys right now, things will happen very, very quickly and will be done before you know it. What's another seasonal tendency, guys, that most people will deem as bullish? Love it very much. So should I not hold Bitcoin long term in my main portfolio? Well, what type of holder are you when it comes to Bitcoin? Are you looking to sell for fiat, or are you looking to accumulate as much Bitcoin as possible for a future where Bitcoin reigns supreme and is the currency that we all use to transact upon? That's the question that you should be asking yourself. You're looking to accumulate, okay? But accumulation happens also by buying and selling, right? Where did you buy? Where did you buy? Because that's where the answer lies. $85 to $90. So you're a profit, but in order for you to have a 2x, you gotta wait for what, like 180k, 170 to 180k. The chances are that, in my opinion, while there is the possibility of reaching maybe those levels, is that it's not going to be worth it. Like, are you holding Bitcoin for the sake of saying that you are holding Bitcoin, or are you here to like make an actual significant return? Because 100x in crypto is learning nothing, to be honest with you. So in my opinion, take into consideration what I've just said. That's the best answer I can say. I cannot tell you, no, don't buy it. If you're looking to accumulate, just know that another bear market will happen. You know, a significant rally that is not gonna be, how can I say? If there has to be a paradigm shift, right, with how Bitcoin trades, right? Because what most people would like to see is Bitcoin take the S&P route where it just keeps on going up, right? But even the S&P has its bear market. I think that what created a difference that allowed that to happen in the S&P was the financial crisis of 2009. I don't think that Bitcoin has had its own major crisis that will not make another bear market likely. Look at my DCA areas, the levels that I've highlighted in red. I don't think that this is necessarily the final bottoms, but look at where the prices are pointing towards. I mean, this region over here is between 64 to 60. This one is 54 to 41. You know, I'm looking at those prices, and I can guarantee you guys right now that I'm looking for much lower prices than those, right? So if you're looking to accumulate, I think that there has to be another bear market, and that's where you should be considering that. I'm here for ROI and long-term holding because I believe in crypto, but I want to make returns, so moving it into a stablecoin and buying at a low. I think that you're in the late stages of this bull market for you to consider Bitcoin, in my opinion. I could be wrong. There's plenty of people that I respect that say 300k is possible, but even there, you know, you are talking about a 300% gain, and I think that these altcoins will outperform 300% based on your entry, at least. Okay. Hello, Core. Really use some emotional support right now. Broke my own trading rules. Didn't set proper risk management. I was trading on a different DEX and ended up losing 2% instead of my usual 1%. Feeling pretty disappointed in myself. Well, I think that at least you didn't blow up. That's a good enough start. The reason why, well, why did you lose at 2%? Is it because you didn't understand the platform correctly, or because you broke your own rules? Well, you did say that you broke your own rules, so I think I answered myself. Neo, I don't know when you joined in this live, but I think that you have joined recently. Can you confirm that you have just joined? Yeah, 10 minutes ago. Okay, so look, this live is being recorded. It's going to be available in the Profit Manage channel. Make sure that you go and subscribe. Watch this because I cover psychology in a very deep manner in this live stream. Okay, so okay, you're subbed. Awesome, awesome. Okay, make sure that you go watch it. But can't you still profit on a bear market trading? Yes, you can. But we are talking about holding before, right? So trading, you can, absolutely you can. There's other markets as well. Like you can trade the futures market. I'm not referring to futures as in crypto leverage. I'm talking about the futures market. Can you send your YouTube and X? You can just go on my. Where is it? On my Discord. Okay. I don't know why it's not showing. And here you get all the connections. Okay. You can see my X, IG. IG is not even active. I don't use Instagram anymore. YouTube channel. You get everything. Okay. Um. On TradingView, you can set stop loss for Binance. For MEXC, you cannot connect it as a broker. Yeah, no, you cannot do it. You cannot do it. You cannot do it. So, Bitcoin currently moving up, but honestly still in a range. Like I said before, bullish in the short term. As long as we hold this trailing here, the uptrend can continue. The moment that you break it, I don't think that you're going to be reclaiming like you've done before, to be honest with you. I think that what happens there is a push to the downside followed by a potential retest. And from there, we can actually start our journey lower. If we move to the upside first, the same remains valid. Okay. I don't know what event it will be, but just know that the lower we go with these altcoins, if they make new all-time lows, or if they go back to range lows of their bear market, that is a big opportunity. It just tells us that we have recovered all the liquidity since this rally, right? All the way back to the bear market, and that allows you to, just understand that there's a lot of preparation for this whole season. That's where I think that you will see a major push to the upside. There's a lot of gaming coins at all-time lows. Correct. Good observation. Do you use Fibonacci's or volume? I use both, mainly Fibonacci's. I cannot imagine what will happen on a bear market. So I will say one thing. I went to a very important dinner where at the table there were millions and millions of dollars. Okay, there was this person that was in I could say a network that is worth around $90 million. Okay, and he told me that someone, an high profile person, told them that basically there is going to be, and don't quote me on this, okay, because I was aware. Well, I was present in this dinner, but I wasn't aware of this person before, and I wasn't there to hear it with my own ears. But this person was told, right, that there is going to be a significant financial reset in 2027, where this person advised this person that I know to be in cash by then, because there will be plenty of opportunities. I do have a similar time frame, which is why I found it interesting why I'm saying it to you. But that doesn't mean that we will not have any events between this year and next year. Okay, that's the best way for me to put it, guys. What I'm going to do next is continue answering your questions, and then I will also show you guys the strategy that I was talking about and how to apply it, just to give you guys something to chew on for this live stream. I'm gonna be right back. I'm gonna get some water. Give me guys 2 seconds and I'll be right back, okay? All right, guys, we're back. We're back. So, no more questions, it seems. Let's get into the trading strategy, and then we can call it a day. We can wrap up. Like I said, I'm willing to do those live streams more often. Hopefully, you guys will enjoy that. We'll give you guys a schedule hopefully by tonight. I'm still working on a lot of stuff, honestly. Okay? So, what I'm about to show you guys works on every single market from what I've seen. On will you print when the DEX comes? I had a call with Ryan about the DEX. They are looking to onboard, I think, 1 to 2 people every month, from my understanding. So it depends on when I get invited to the DEX. But yes, I will be trading there. It's going to be a lot more. Um, a lot more streamlined for me because you understand that I have a personal group. I'm also taking the trades myself. Then I gotta notify people on Involio, maybe even on X. Like there's a lot of steps for me to get a trade out. So a DEX will definitely be simplifying quite a lot. Neo, what I missed, you missed a lot because I had a talk with FTMO. I mentioned psychology, how to profit from this bull market, my expectations about what I think will happen next. There's quite a lot, okay? Honestly, quite a lot. Make sure to watch the replay. We are 1 hour and 27 minutes in, so it's not super long. Let's get into the strategy, okay? So like I was saying, you can use this in every single market. You can use it in Forex and whatnot. Just be aware the markets that have the gaps. So I'm referring to the stock market. I'm referring to the Nasdaq and all of this stuff. It can be a little bit trickier because with the gaps, you don't have the exact values and ranges, okay, which could make things a little bit harder. But this is something that you can apply, right? For funded accounts, your own accounts. It's something that when perhaps you see it, right, you may say, how did I not come up with this before, right? So let's get into the juicy stuff. Hopefully this chart is a clean chart. Let me go on there. Is it a clean chart? I have a bunch of lines here, but I don't remember why I placed them. Anyway, clean chart. Let's remove a bunch of stuff. Okay. So I'm gonna do the example with intraday trading. Okay, I'm not gonna be breaking down all the low time frames because otherwise it's going to become way too long. Many times when I apply this strategy, well, because I watch the market regularly, I don't even need to break every time frame down. Okay, so the first thing that you want to do is understand where you're trading. In this situation, Bitcoin is currently trading at a new all-time high, right? Well, obviously not a new all-time high, but we are in a new all-time high range. Okay, we're in new all-time high territory, and that is important because in this range, you understand that if you're going to be operating on the higher time frame, such as perhaps the daily, you're not operating at the higher probability at the moment. Reason being is because within these two ranges, within these two levels, right? You have scenarios for more downside, and right now I'm taking a trading approach. Okay, I'm not showing you guys what I think it's going to happen necessarily. I'm showing you guys the data, like literally what we have in front of us, right? Which is what you should be doing when you're trading regardless. So the first thing that we want to do is identify the levels, okay? So in this situation, what I already understand is that this range that I've highlighted in red can either do two things. Either reject price, like it's doing right now so far, make it find resistance at this level to then push it lower, right? This can be something that happens, or another thing that can potentially happen here is this, okay? So the first thing that you gotta learn doing, and guys, if you're serious about learning this stuff, throughout this live stream, you should have been taking notes, okay? And you should keep on taking notes. if you haven't done that, again, this is being live streamed and it's being recorded. So go through the recording. Oh man, you missed a lot because I'm about to wrap up. I'm giving you a strategy at this moment in time. But make sure to watch the replay on the YouTube channel. It's going to be the Profit Manus YouTube channel. Coming from San Diego, man. That's crazy. Can you give me just what are you going to say? Okay, awesome. Awesome. Okay. Okay, so going back to the strategy, I'm gonna ignore the chat for a second here, and let me actually remove it so you guys can focus along. Okay. Cool. So you're already operating based on triggers, okay? You're not taking the trade unless you see what you want to see, okay? And that is, of course, if you're going to be operating on the higher time frames, such as the daily. If you're not doing that, okay, cool. Scrap the entire thing. Focus on where the current price is at, okay? You see two important levels at this moment in time. If you keep things very, very simple. You have this high over here, and this low over here. This is your current range, okay? And yes, you are in a range within a range, okay? But right now, if I'm scalping, right, or if I'm intraday trading, I don't really care about the external stuff. I only care about where price is at, what levels it reached, why it reached them, and what happens, what potentially happens next, okay? So we have this high over here, which is pretty much at the same level. So what that tells me is that if I am correct, we should be having some sort of a double top at these levels. The way that you would be calling them if you are in the smart money concepts world is relative equal highs, okay? Relative equal highs basically mean that there is a high probability of a lot of, well, it's not high probability, it's actual based, it's a fact, right? That there is a lot of liquidity above these levels because people that end up going short place their stop losses above this level over here. So we know that the market is seeking liquidity, and therefore that we're gonna be looking for a return back there, okay? But what I do, right, and why my strategy, in my opinion, is so easy to learn is that I identify ranges and consolidations, okay? Ranges and consolidations. Let me show you guys an example. Look at where this level, well, look at where price landed exactly here. Okay, look at where this wicks happened. Do you guys believe that the wicks are coincidences? No, they are truly not. Okay, I'll show you guys how you can decipher them. And the lower you go with breaking all of this down, right? And the lower you go with the time frames, the more precise your entry can be, the tighter your stop loss can be, the higher the leverage can be, and the more profit you're going to be making without looking for the moon. Okay, I'm giving you guys some game right now. So, overall range in this situation was this. Okay, there's actually a few ranges in here. One of them is from this low to this high. And you can see that my tool over here, right, my Fibonacci tool, only shows what is actually some 4 levels. Okay? But if I want to keep things extremely simple, I will only use the equilibrium point and the minus 0.5 point, okay? Just to keep things super, super easy. Then, do you see any more potential ranges? If I break this down by going on a lower time frame, I can actually adjust this more properly. For example, this is correct. By looking at this candle and the way that it closed, I can see that there was a range within this level, okay? And then I can also say for sure that there was a range from this high to this low on a lower time frame, okay? Something like that. What do you notice? Well, what you notice is that the wicks ended up hitting exactly where I've deployed my equilibrium points. So what do I do? What I like to do in this sort of a situation is actually created zones. Now, if you're going to go for super refined stuff, you need to go on many time frames to actually understand what's the more likely level. But that is some advanced stuff that I don't personally advise you do at the beginning. But what you're doing is giving you some sort of space to potentially be proven wrong, okay? By measuring other probable points the price can retrace to, right? How many of you guys do smart money concepts? How many of you guys are aware with breakers, fair value gaps, order blocks, and all of that kind of stuff? Anyone in the chat? Anyone that does that type of stuff? Breakers is ICT, correct? Yes. How many of you guys do that? Okay, you know fair value gap. I use fair value gap all the time. Once you apply my method, what you will realize, right, is look at that. Where do you find the equilibrium point to be? Isn't that in between a fair value gap? Guys, isn't this a fair value gap? Let me identify for you. This, people will say it's a bullish fair value gap, correct? ICT himself, right, teaches you, and the guy has done so much content that perhaps he has given some sort of refined whatever, okay? It teaches you to enter at the beginning of a fair value gap, right? Put your stop loss below the fair value gap, whatever. So technically speaking, right, this will be your entry, right? Following ICT. If you were to follow my model, you not only use the fair value gap, you actually rely on the equilibrium points to give you the more refined entry. All of a sudden, your entry looks a lot better. And perhaps you can even consider a smaller stop loss because it's away from the levels where you could consider price to reach before a reversal, essentially. Yes, Davis, it's equilibrium points. Guys, the market seeks equilibrium. The market looks to balance. What does the market want? It wants balance and it wants liquidity. Forget about the golden ratio. Forget about all of that. Forget it. Many times that we reach the golden ratio, price tends to decline. Why does it? Perhaps the 61.8% triggers a bounce before falling over. How many times have you seen that? Right? But when you hit the equilibrium point, you're almost always guaranteed to get a bounce. Have you guys noticed that? So what I just showed you, and you need to watch it honestly, okay? And to be honest, you can put your stop loss away from the highlighted areas, but I like to put it away from the equilibrium. Sorry, not the equilibrium. Away from the range. So realistically speaking, this is where I want to put my stop loss most of the times. Show me EQ points. I haven't heard about those. Only simple EQs. It's the 50% and the minus 50%. I don't use ATR. Is it an exact bounce on the 0.5 line? Because I haven't seen it wick below sometimes and come back up. Here's the thing. Look, we have hit the equilibrium points. We closed no candles on it. We actually started to retrace right away after hitting these equilibrium points. Okay, so and let me actually not confuse you by actually removing the middle line of this rectangle over here of that zone. Okay, oh my bad. Yes, I don't want to confuse you. I showed you guys 3 levels. Let me also remove this one over here as well. Remove the middle line. Make this green so that it stands out. Okay, so the red area is where I was expecting price to retrace based on the equilibrium points. Okay, now it goes without saying that you got to understand the trend. Okay, you got to understand if we are in a buy model or a sell model. How do you recognize a buy model or a sell model? It's very simple. A buy model looks like this. It starts with a W formation, also known as a double bottom, or an inverse head and shoulder. Okay, you then get a push to the upside. You then get your level 1 retrace. I like to call this expansion, the first expansion, the level 1 push to the upside. You then get a level 1 retrace, followed by a level 2 continuation, followed by a level 2 retrace, level 3, did I say correctly? Well, level 1 retrace, level 2 retrace, level 3, retrace. From here onwards, you're looking for a double top. Also, possible to see a head and shoulder formation. And on the way back down, you're looking at the same exact thing that you've seen during the upside. Okay, this cycle that I showed you happens during the during uptrends and downtrends. Okay, you get shorter versions of the buy model during the a bearish trend. Okay, is an equilibrium only discount and premium? No, but you do use it to measure discount and premium. Yes, above equilibrium is premium, but I think that stuff, unless you apply correctly, will only confuse you, to be completely honest. I'll show you guys more examples, okay? Let me finish with the explanation. You gotta show me I don't know this shit. Dude, I literally said that I'm gonna be live streaming a lot more often, and it's going to be a mentorship level live stream on a, I want to say on a daily basis, but you're gonna be learning so much. Yeah, it's the first live stream for everybody, bro. First live stream for everybody. Chill. Unless you're in premium, you're not aware of the way that I trade. Okay. And this is just one of the things that I could teach you. Honestly, there is so much. Buy model. Sell model. Okay. Take a screenshot, draw it, do whatever you want. Looks like this. It can also begin, like I said before, with an inverse head and shoulder. Can also end with an head and shoulder. Okay. I saw some of you guys say Elliott wave. I don't do Elliott wave. It's more confusing. Like I'm not saying that it doesn't work, but it's way too confusing in my opinion to find the correct wave. Ignore that. Scratch it. It's a lot easier than you think. Because this method, what it allows, right, is it allows for profitability to some degree, regardless of your understanding of the current buy or sell model. Let's say that you are unaware of this concept, right, and you cannot find refined entries. Like, for example, right, let's say that, like I showed you guys before, right, and I'll put it back. I showed you that between these two levels, there is resistance, okay? Where we are looking for price to flip it above or find the resistance on it, correct? Guys, are you following along? There's a lot of people talking right now. Okay. Just because I've seen a lot of people chatting and I want you guys to pay attention, okay? So, like we said before, at this level of the year, on a higher time frame, is where we want to find confirmation, okay? At this moment in time, because of where we are dealing in, because there is the situation where perhaps there is a potential of having peaked, right? Or there is a potential of seeing a bull trap. There's a potential for continuation. Who the fuck knows? We don't know, okay? We are looking for something to develop as proposed over here, okay? But we don't know for certain. And because, right, from this level over here of resistance, we have already broken below, retested it, failed to stay above. There is a situation that perhaps we don't even get above 109.9, okay? There is a situation. But what does this matter show you is that you don't have to know necessarily if you're correct or wrong on your world trade idea to make a profit. Because what you then want to do is use the same, well, the minus 50, right, of the ranges that you use to find an entry to also find your take profit levels, okay? For example, what do you see? Minus 50, minus 50. We can consider that a zone, okay? And at this zone over here, what you can do is to potentially consider your first take profit. From, well, you entered over here, you're currently at a profit. Perhaps you want to secure a position, right? By taking a partial off here, put your stop loss at break even, and all of a sudden you don't care about what the price does. If it reverses, who cares? I made money. If it keeps on going higher, I have other take profits. Okay. Now, is that enough? No, because as you will break down, right, on lower time frames, you can actually refine things a lot more. For example, you can find edge opportunities. You can get in a situation where you're both long and short. Perhaps you've taken profit on both trades and moved the stop loss at break even. That is the best situation you can be at, because one trade is going to be stopped out and one will continue at a profit. You can also measure, right, previous consolidations and previous equilibrium points, because they still matter. For example, here, what do you see? This is a range from this high to this low. It is a range. There is another one over here that is mostly... I will do it body to body. What do you see? Many levels, right? The point at the same exact region over here. So in this sort of a situation where it starts to get complicated, where you have many levels to consider here, it just tells me that around this level, I must be taking some sort of partial and protect my position, because there is the possibility, unless price breaks through significantly to the upside, to find resistance here, perhaps my trade gets stopped out, okay? So with this method, you are just looking for a partial to be taken at the first take profit, and then letting the trade do whatever it wants. So you're using that zone, probably order block, as a TP, right? Here's the thing. I did not have to find the order block. I let the equilibrium do the work. That's why I said, if people that use smart money concept were to come to the realization of this method over here, they will get devastated, because smart money concept takes so much time to master, when in reality here, you can just find confidence for what works and what doesn't using equilibrium points. For example here, what do I see? I see that there is an overlap in this region over here, which tells me that a return by price at this level is high probability, but also that in this region over here, taking profit is wise. Reason why, after the entry that was made over here, taking profits during this push to the upside was considered wise, as there was, you know, this range over here of the 50, the minus 50 and the minus 50, okay? Here, for example, if you entered here, right, and you take a partial here, if you get stopped out because price returns here, cool. You made some money during this move to the upside. Then, if you are advanced, and I wouldn't really consider doing this at the beginning, it depends on your stage as a trader, you can then up back in, but even if you don't, the price continues higher, you made money, on to the next trade, right? If you keep on doing this on the lower time frames, I can guarantee you that you will always find a trade. Okay, so do you guys understand it, or do you guys need me to explain it once again? Because I know that it can get confusing. While it's very easy and to understand, at the end of the day, you're just using two levels and understanding direction. It can become perhaps confusing. You understand? Does anyone else understand? Does anyone have questions, guys? Kinda. Okay, what are your questions? Can you do a smaller time frame? Yes, I can. Hard to follow. Okay, I'll make it easier for you guys. Okay. So the first thing first, okay, if I'm trading on a lower time frame, I want to understand where we're coming from. Okay. I gotta go on at least on the daily time frame. And I can see, right, that we were coming in from a situation where this was the high. We then liquidated these lows, creating what? lower lows. Here, we were making lower highs. And here, what? Lower lows, okay? So we can see that the pattern at this moment in time seems to be this one over here, okay? There is the chance, Davis, wait, you say that it's bearish. Okay, cool. But as a trader, we trade based on what the price is showing us. We don't trade necessarily what we believe is going to happen. We trade based on what price is showing us. With this pattern right here, you don't need to care about whether it's bearish or bullish because I drew this pattern, okay? But you gotta understand that right now you're trading in a critical area, okay? Critical area. You have liquidated these lows. A shift can potentially occur. No, I'm not saying to not trade with a trend, but you gotta be aware of where you're trading, okay? Because it's not the first time that we trade at these levels, okay? So what if we do get a breakout from these levels, okay? Usually, on strong trends, right? While it's still possible to see it happening here, you don't really spend too much time on resistance or close to resistance. Usually when I tend to see stuff like this happening, I tend to anticipate a breakout. But let me finish with this stuff over here. Then I will go on the lower time frames as promised. You gotta realize at this moment in time that you're still in a lower high situation until proven otherwise, okay? How do you prove it otherwise? Well, you start to trade above this level, or there's a support continuation higher, breakout, okay? But the breakout is only valid if it's coming with a retest of the newfound support. Without the retest, right, you get in a situation of what? Bull trap, okay? So, to summarize it, I'll actually take the annotations down. 1. Identify the current trend and liquidity swipes. Okay, this is the first thing that we need to do, and we do it on a higher time frame than the one we want to trade upon. Okay, so this is point number 1. Let me actually make this a little bit bigger for you guys so you guys can see it. Okay. Then, like I said, we have taken liquidity out from these lows, not from the highs just yet. So we understand that while shorts will technically be favored, that there can be longs, right? There can be longs that you can take that perhaps are not going to be taking you to crazy new highs. Perhaps we don't even make a new all-time high, but we don't care about that. We are here to understand the direction for the time being. So this is our current range, okay? Like I said before. High, low. We have also had this retrace here. So if you're trading the higher time frames, like for example the 4-hour, it would also be good to consider this equilibrium point, okay, which we haven't returned to just yet. The overall range, which is this one over here. So we know that this area here will eventually be returned, okay. You can also do your technical analysis with this method. Super, super convenient, okay. You have identified the level of support. You can see the price hasn't reached it just yet, so we can expect this low to be wiped at some point, okay? But like I said, we have to go on the lower time frames, okay? Before I do that, right, like I was showing you guys before, price is currently bouncing off what? An equilibrium point. So from my understanding, right, of what I see right now, it seems unlikely that until we hit at least this level over here of equilibrium, or we take out this high, that we will target this low. So on the lower time frames, I'm going to be doing what? I'm going to be favoring longs. Okay? Let's go on the lower time frames finally. I'm going to skip quite a lot, to be honest. Okay? Because I just skipped from the daily to the 4-hour. Hopefully you guys don't mind, but otherwise the video will become way too long for uploading it on YouTube. And here, what I'm looking for, right? And let's assume that you're scalping. Instead of the daily, you can use the 1-hour time frame, for example, to do the work that I've done on the daily. You're free to do that. What you're doing here is understanding the flow. What do I mean by understanding the flow? Look for equilibrium points of visible ranges. This starts from your higher time frame analysis, like I've done previously on the daily. So let's assume, right, just for educational purposes only, that I'm looking to take a trade on the 4-hour. Okay, I'm not gonna go on the 5-minute. It's the same thing. Honestly, it is the same thing. Okay, but what do I see? I see that this was a consolidation from high to low. Because I've already identified that zone previously, I can create a zone. Therefore, I could have taken a trade. You're ideally looking for areas that are being marked by 2 or more equilibrium points, okay? For example, this one over here. We can see that the wick actually ended up going a little bit lower than this zone. That is because this candle in here also had its equilibrium point over here, so there was reasons to push this a little bit lower. The more time you spend analyzing equilibrium points, the more refined your entries can be, the smaller the stop loss, the higher the leverage that you can use, the more money you make. Okay? But even if you stopped at a simple analysis, you will still be at a profit on pretty much a very good entry, I would say. If you spend more time refining it, look at how the difference can be made, right? It's a substantial... No, that is not true, Membra. The lower the chance your entry gets hit. You may have to wait. For example, here, you may have had to wait for this correction over here to happen. I can tell you that that is not true, because I've traded this many times, and that's why my entries become super precise. I can tell you that is not the case. You may have to display more patience, though, and you end up taking more less trades. You go from not so much a refined entry, which can still be a great trade, to a more refined entry like this one. Your risk to reward ratio doubles all of a sudden, because you're putting more work at finding the best possible entries. Okay? Up to you. Anyway, so this was a range, equilibrium point of a range. Alex, I did not understand how you identify the equilibrium points. You basically identify ranges. What is a range? For example, right? The question and answer session we had at the beginning. Look at this. This is a range. From low to high, right? Do you see what I'm seeing, guys? Davis, do you see what I'm seeing? You identify your range. You go from the high to low of the range, and you mark your equilibrium point, okay? The settings of my Fibonacci, super simple. I only need to see 2 levels. I don't care about anything else. What you're then looking for, right, is very simple. What you need to realize is that if there is multiple ways that you can trade this. Yeah, it's some levels of Fibonacci. I just ignore everything else that they teach us to use, right? I don't care about the 0.61.8%. I don't care about any of the other stuff. I only want the equilibrium point, because the market seeks equilibrium. Why does price return to the 50 EMA, for example? Because it sets an equilibrium back in the market. Why does the price return to the VWAP, guys? Why does the price return to the to where the volume profile marks the higher level of volume? No. Oh yeah, sorry. I understand where you're coming from because you don't see this. Sorry, you don't see these levels here. I apologize, guys. I apologize. I just keep things super easy because you can imagine I identify a lot of this stuff, okay? And I don't wanna. Couldn't you say the 50 EMA comes to price? No, because it's literally a strategy of the market makers to have a mean reversion where price is away from the 50 EMA and price returns to the 50 EMA as a mean reversion strategy. There's PDFs around it. Look at that also, because I've identified this equilibrium point, I have another zone, which in this case, because I'm doing more analysis, I could have actually found a more precise entry, right? Look at that. In this case, I would have gotten pretty much a perfect entry, I would say, on my trade idea on Bitcoin. Okay, so what I want to also make sure you guys understand here is show you guys these two examples here. Okay, so for example here we have a range. Okay, let me show you guys a realistic scenario because it's easy to say in hindsight, you may say, and you're correct. But I also want to show you guys how to deal with this sort of a situation where you have identified a range, but price hasn't broken out of it. Okay. Is there any trades that you can take here? Do you see any ranges? Well, the more that you look in this area, the more you could potentially identify some ranges. For example, here, I do see a range. Okay. And so on. Here, for example, another range. Okay, so we know that this level over here is quite important. How do you trade this? So first and foremost, the reason why I said it's important for you to understand where price is going is because otherwise you will be ending up taking this sort of a trade where you get a zone and understand that a zone is created by using two different equilibrium points that are meeting pretty much in the same region. You cannot trade this method with only one equilibrium point. You must identify your range using two equilibrium points. Okay. Now, where do people potentially fail with this if they don't understand it? They can only fail if they don't understand where price is going because they did not do the higher time frame analysis. Because otherwise, it gets into a situation where you consider this to be a resistance, right? And then you will be enticed into taking a short, okay? Which sometimes can play out, okay? Sometimes it does play out to even play the wrong trend, but it's mostly not gonna be going past the first take profit, okay? So you could potentially arise into this sort of a situation where technically at the beginning you were a profit and then you got stopped out. That is because what I like to do is for price to actually leave the equilibrium point and then return to it, okay? For example, here, you get a different situation. You get away from the equilibrium point and then you get a return to it. And because I've done my higher time frame analysis, right, I know that price wants to go higher rather than going lower. Let's assume that I've entered here, okay? Stop loss away from the equilibrium, the range, okay? Let's see how that went. Stopped out, okay? Because again, it's important to understand the overall context on the higher time frame. So it doesn't mean that because you have created a bunch of zones that market will respect it always. You gotta go with the trend. Like somebody asked, do you not have to go with the trend? Yes, it's important. It's crucial. That's why we began with the with identifying the current trend and liquidity swipes. Okay. Cool. Obviously, on the lower time frames, the market structure shifts a lot quicker, right, than the higher time frames, and therefore you need to be adjusting and knowing your levels, the more analysis that you do on the higher time frames, the easier will be your trading on the lower time frames. Okay, cool. So this trade didn't work. Now, what are we waiting for? Because we have seen the expansion here, what do you also see? Isn't this a breaker formation like I showed you guys before? Where a new high is made, new all-time low, sorry, no, not new all-time low. New low is made, and then a new high is made. Isn't this a bullish formation? And you also, yes, you can also consider this a break of structure, and you also got your equilibrium points. You're looking for what? Exactly, a retracement. You wait, look at where price landed, okay? This is your long position, and I'm gonna be putting a stop loss over here based on my very little analysis that I've done here. Let's see how it goes. We are now at the situation that I was showing you guys before. In this situation, I'm bullish, but I've also taken a partial year. Reason being is for the same exact reason I told you to identify a zone using 2 or more equilibrium points in the same range, because you then get into a situation where you no longer have to care where price goes. And yes, like Membros said, TP 1 is it, SL a break even. The higher probability trades, guys, where do they come? They come once you clearly identify the trend, okay, and the next equilibrium point, the next range on the left, right? That's why I also said that, you know, you're trading in all-time highs, which is a little bit more difficult to do. But if let's say that I was long from these levels here, okay? Let me show you. The easier trades come where the opposing potential resistance, right, is far away from your entry. Let me show you what I mean. So this is our range, okay? Not the easiest of examples to show because I may have to go on a lower time frame. But I also see this range over here, which perhaps will make things a little bit easier to show. Frankly speaking, not the best example to kind of show this, because I will then be having the assumption that you have a clear understanding of the direction, which is not always a given, right? But technically speaking, this will be your entry area. Reason being is because this is a bullish breaker, right? Like I showed you, double bottom, level 1 expansion, level 2 expansion, retrace, right? Retrace into where? A bullish breaker. So you add your zone, your equilibrium zone, you add your validations, right? Using smart money concepts, you had a significant push to the upside where you didn't really have to take much profits until at least, for example, well, sure, there was this range here where you could have used to take some profits, where you can see the price started to stumble upon a little, okay? So here you could have made your first take profit, but you then identify other ranges, okay? This is a zone where you have taken your first take profit. If price is far away from your entry, you can even consider an edge position where you go short while keeping your long as well, right? If you're like really undecided of what could potentially happen. Then because you have identified the previous, the next ranges that price could go and hit, right? You take profit at those levels. For example, here, I see a range. Potential another take profit level. The reason why I say potential is because I want to identify other ranges as well. I want to identify zones. Because yes, this level over here, this equilibrium point, can tell me that there's going to be some hurdles as price approaches that. But it doesn't necessarily tell me that it's going to be a significant level of resistance. Okay? So my job here is to identify as many ranges as possible. For example, here. In this situation, while price, of course, in hindsight, we can see the price did go higher, right? We can actually see the price spent a little bit more time at this level here and at a more significant retrace than what it did at this equilibrium point over here. Reason being is because we had 3 equilibrium points all in this range. So we knew that there was a level of resistance there. Okay, this perhaps was a decent point to consider an edge short. You entered here, you have taken profits year and year. An edge position, just in case your long gets invalidated from this point onwards, can be considered. And because there was also a range here, right? Look at that. Isn't this a range? And because it was another area here, what you could have done here is, my bad, taken a partial of your short position, put the stop loss at break even. If you were more adventurous, and I'm saying this because it's in hindsight, I'm not saying that I would have done this myself, but here potentially could have even considered another long, right? Stop loss over here, entry here, and all of a sudden you have 3 trades that are all printing. Your short will be eventually be stopped out. And yes, Davis, yes, you will have even taken a partial year on this long idea, just in case the short will have started to print once again. Like, honestly, you guys could do so much with this. This is the approach, guys, that I've done live on Involio with my Ethereum short. The trade that I've used to come back into Involio, I believe. Look at that. Ethereum. This is actually taken with 40x leverage. And I'll show you guys proof of that. Where is it? PNL. Where is it? I don't remember where I posted it. Maybe I skipped it. I don't know. Maybe it was this one. I'm not sure. No, it's not this one. Hold on. That's another short. Okay. Okay, I think we are here. There you go. 30x, 300%. That's how I did it. 2,800, pretty much the top. You can go and check for yourself. Okay. So, the reason why I showed you guys this is because once you apply this method, as long as you do it correctly, and I really advise that you first do it either with very low amount of money, just to understand it, or even just use paper trading, is because you no longer have to worry about not having enough trades. You will have many, many trades that you can take. And by the way, look at that. I told you that Bitcoin was bullish, and right now we're moving up. Right? Literally on this basis right here. So, it guarantees a lot of trades. It guarantees you edging positions to be taken. What more do you want? Like on lower time frames, if I were to really sit down, right, and go on a lower time frame and say, okay, I'm playing every single range. I'm not saying that I wouldn't be stopped out every now and then, but I'm pretty sure that I will be exiting the day with a lot of profit. Pretty confident. Ever since I introduced this method to my community, I don't think people have lost any money. Stopped out, yes, probably. But I mean, I'm up 213% to my trading account, and many other people are taking their own trades. It's been a great method, honestly. But you need to identify the current trend and liquidity swipes, okay? It's not me telling you just identify a bunch of equilibrium points and take trades. But I think that it makes super easy. Like, let me show you guys a bunch of trades that I've actually taken myself, okay? I'll show you guys some of the trades that I've shared with my private community. So this Bitcoin short, for example, I've entered right here, okay? This is my entry. Take profit number 1. Here did not get stopped out. It didn't reach it by like 4 points, something crazy like that. Yeah, you can see that we didn't reach it. But by then, right, I've already taken the first profit and put this up as a break even. So I didn't even really care about what potentially happened. Okay. And because I've identified all these equilibrium points, yes, here I could have taken longs. Okay. I didn't take it. I was away, and I was also looking for confirmations of what could have potentially happened here. You can see that I have 3 different projections for this particular level because it was such a make or break level. You don't have to take every single trade, right? You know, sometimes you do reach critical points in your chart. And by the way, let me remove this because the trade is no longer at play at this moment for me. But you know, sometimes you do reach critical levels, like this level over here was for me, and I didn't take the long. But technically speaking, I could have opened an edge long here, and right now I would be at a profit while the short would have been stopped out at a profit. You just need to catch one move, exactly. You don't need that much, right? At the beginning, as a trader, you should be working at simplifying your entry into the trading world, rather than making it super complicated. Let's go on Ethereum. I have a bunch of trades on Ethereum. So this was the first trade that I've taken on Ethereum, the short. Okay, this was my entry. It was because of this equilibrium point. Wasn't available, so I did not take. Honestly, I forgot to put the limit order here. So I entered over here. Wasn't super perfect, but it was good enough. Went all the way down to here. Here I taken a partial. I then put an edge long, which I'll show you guys right now. Where is it? I don't freaking remember. Yeah, it was over here. Pretty sure it was over here. Yeah, edge in the edge. This one was the edge, 2628. You can see that it matches pretty much. Oh, never mind. It was over here. Sorry, it was over here. This is where I've taken my edge long at the beginning. I was at a profit. Then that got stopped out. I kept on printing with my short. Here, same story. Kept printing. Edge long, right? And here you also have another long setup because price flipped a critical area and previous equilibrium point zone for me as a support. This was the refined entry. You can see, guys. I'll check the chart. The chat in a second. But right now, I'll keep on showing you guys this stuff for now. Look at that breaker at a critical level. So I knew that it was a good time to long. Entry here. Take profit number 1 hit. It keeps on going higher at this moment. Happy days. XRP. This trade was not taken. I said consider this setup only upon a significant push to the downside. This was another variable for me. Okay. But if it does flip as a support, I already have a long position ready to take. Was also long before during this move to the upside. This is another setup that I'm considering. Algorand, look at my entry. Using the same exact process. I cleaned it up a little. This was the entry. Stop loss, currently at a profit. Looking for another re-entry down here. It hasn't happened just yet, but eventually will. And I know that some sort of bounce will come from these levels. Take profit number 1 over here. Anything else is a bonus. Let me show you Casper as well. Entry year at the beginning, take profit number 1 year, retrace back to the equilibrium, to the break-even point. I got stopped out, but I made a profit. Send, honestly, same story, right? So it does work, but you need to apply the concepts that I taught you so far, and it will take some time. Okay, it will for sure take some time to understand this. It's pretty much all I'm using to trade right now. Equilibrium point, push to the upside, take profit number 1, retrace. I'm out of this trade. I made my money. I'm looking elsewhere. FTT. Look at the tight stop loss. Entry over here. Wasn't even perfect, to be honest with you. It means that there was something missing. Currently at a profit, right? And so on. I think that you guys get the point. And there's many more setups that I'm proposing to the premium and whatnot. But is this clearer now, guys? Does that make sense? Yeah, did I speak about trade inversion, inverted fair value gap, order block analysis theory, or all the BS? Guys, I showed you 2 freaking red lines, right? So, yeah, as long as you have the direction intact, you're good to go, okay? So, I'm gonna be calling it a day, 2 hours and 22 minutes of a live stream as a beginning. I think that we've done enough. Alright? Did you guys enjoy it? Let me know. Awesome, awesome. I will give you guys where is it? Please go down. I can wake up tomorrow on green. I said no, it's cap. When did it happen? June 23. I don't remember what happened on June 23. It's breaking out. I told you that I was bullish in this example. Oh, you lost that trade? Oh, because you said that, oh yeah, it's going down. I said, no, it's cap. I remember that day. Because everybody was going short. Honestly, everybody was going short. I saw this level flip as a support. I said, no, we're going higher. Alright, guys. I didn't believe you. Hopefully now you do. But no, okay. Guys, I enjoyed it. If you missed any of this live stream, make sure that you have to go and watch it once again. It's going to be available to you all. It's going to be on the YouTube channel. If you're interested in VIPs and all of that stuff, I will get channels set up in here as well. But you can find the links under any of my videos on YouTube. There's instructions there. That is if you want to level up your game, if you want to know my portfolio, if you want to have my mentorship classes and all of that kind of stuff. It has been proven to work quite a lot for a lot of people, so if you wish, it's there. Other than that, guys, thank you so much. I'll see you guys next time, and until then, peace out.